Ian, if I gave you £500 million worth of capital, who are the people, what property and which place would you look to allocate that capital?
Good question. I think on the people side, difficult to, I wouldn't want to particularly name any specific individuals. I mean, I'd say I've come across some great people. The UK's got many good entrepreneurial, smart real estate people, and that's why it's been such an innovator over the years. So there's no shortage of quality of people, I don't think, within the UK. I think if you're going to deploy 500 million, I think it's really tough to say I'm going to do it all on strategy X. I mean, it partly depends. Are you going for, are you looking for wealth preservation? Are you looking for low volatility, or are you trying to, make a higher end return? Obviously, I like our supported housing business from a low volatility, point of view, and so that really suits kind of pension fund money. But other areas, I think you've got to be selective. I think the next year and a half is still about being very thoughtful and looking at what comes across your desk, and not kind of putting your colours to one thing. And then, so what was the third thing?
Place.
Honestly, at the moment, until the UK gets easier, I would be investing, and am investing more in the US than I am in the UK.
And is that across the US, or is it southern states, or?
Yeah, Sunbelt. Sunbelt. You want to go to states that are business friendly, and the way they phrase it in the US, frankly, is between red and blue states. So red states tend to be more business friendly. Not all of them, and not all blue states are unbusiness friendly. But generally speaking, I come across some family office investors who will only invest in red states because they've been burnt. And my own experience is, we have definitely found it tougher in certainly very high high political conviction areas where there's a lot more interference that just causes drag on a deal, and when deals are kind of finely underwritten, that drag can have a negative impact. So I would say go where money always flows to where it's welcome, so go to places where it's welcome.
In terms of your background, you're obviously kind of FMCG goods background, operator, manager, private equity background. Some of the conversations we've had today has been around operational real estate. Would you apply some of that in terms of the property types to some of those red states in the US? And if so, what car washes is obviously a theme, master regeneration over here in the UK. Would you kind of look at that in the US, or would there be other kind of asset classes?
We have, and again, it's, there are, and I've talked about multifamily a little bit, which I still like. It's a huge market segment. People are going to continue to need to rent. So I think it's, the fundamentals are very good. It's just about getting the right pricing, opportunity there. So I think it's different. If you sort of segment that down, there's different pockets of opportunity within the space which we're looking at the moment. I like the rules in certain states in the US on condo development where you're able to use the deposits. So, on our project in Naples, Florida, we're able to use up to 50% of the retail price, the final price, which you take as deposit, you're able to use to fund it. Well, that completely changes the capital stack, and just makes it that much more deliverable. In the UK, we used to be able to use deposits. I think some people do today, but it's much harder than it used to be. And we obviously were able to use it when you went out and got investors who were buying initially that may end up holding them or may end up selling them, and it provided a liquidity to the market. And that'd be something for you to think about in the future for the UK. But I like that for that particular reason. So different attributes can make things. It hasn't just got about the pure real estate. It's about the whole makeup of the transaction. Is sort of that holistic way of thinking about it.
And it's that kind of slightly alternative or counter-cyclical or kind of unloved or kind of first mover advantage that you typically look for, rather than kind of your core typical real estate sectors.
We like that, stuff with a bit of hair on it, because if you're happy to roll your sleeves up and work it, then that generally there is better value in there. Obviously, it can be more work, so it can sometimes be painful. But generally speaking, that you're a bit more protected on the on the value. If it's too vanilla, unless it's incredible, unless you've got a different purpose. So if you're into wealth preservation, it's very vanilla and very clear and low volatility. Great, but that's kind of different to to kind of more managed real estate.